The second panel discussion today is on the topic financial and liquidity needs of MSME sector. The discussion will be moderated by Aarti Krishnan, Consulting Editor, The Hindu Business Line. Welcoming you on stage, ma'am. I'd like to invite our panelists on stage. We have Ashish, the co-founder and COO at Jumbo Tail, India's leading B2B marketplace and new retail platform for operations at Jumbo Tail, and is deeply passionate about using technology to solve real-world problems. Prior to this, he was a management consultant with Boston Consulting Group, where he worked on diverse projects, including a long-term project for solving leakages in public distribution system in India using biometric identification and Aadhaar. He also founded NextDrop, a software-based service to track intermittent availability of piped Abhiroop. Welcome, sir, on stage. Can we hear it for him, please? Our next panelist is Abhiroop Medhekar, co-founder and CEO of Velocity. And we understand he is building the future of banking and financial services for new age businesses in India. Having worked as a venture capitalist and a founder in the past, he is passionate about reimagining financing products for digital first businesses. He has worked with a VC with Elevation Capital, leading investments in fintech and financial services sectors for the fund. Welcoming Abhiroop with us on the dais. Our next panelist is Mr. Sanjay Gupta, Chief General Manager, SIDBI, Southern and Western Zonal Office, Ahmedabad. He joined SIDBI in 91 as a staff officer, grade A, as a direct recruit officer, and he has completed more than 31 years of service. He's been a part of the first batch of direct recruit officers by SIDBI. Further, he was posted as General Manager and was heading the regional office of SIDBI at Ahmedabad, which caters to the entire state of Gujarat. Welcoming you, sir. Thank you for being here with us. And with this, I'll hand it over to our moderator.
So welcome to all the panelists. After speaking about something so hi-fi as the application of AI in MSMEs and talking about how MSMEs can adopt generative AI and all these very fanciful subjects, we are sort of down to terra firma and talking about the liquidity and financing needs of MSMEs. And what I'd like to really mention is, while we are talking about AI only this year and it's a new subject, for almost as long as I've been a financial journalist, we've been talking about the financing needs of MSMEs. So let me kick off this panel with that question. And I'm very glad to have such a diverse set of panelists here today, because usually it is common to discuss this topic with bankers, etc. But today we have three very people with very unique perspectives on this. So we have Mr. Sanjay Gupta, who with SIDBI actually has an eagle's eye view of this whole SME financing piece. And I'm sure for many, many decades, SIDBI has overseen both direct financing and refinancing of the lending institutions that actually deal with MSMEs. So very happy to have you here. Then we have Mr. Ashish Jeena. I mean, Jumbo Tail is doing some excellent work, and I wasn't aware of it before today, so I'm really glad for this learning opportunity also. Of making these traditional mom and pop stores, the Kirana stores, digitally ready, and also making them market ready, actually a go-to-market piece that Jumbo Tail is actually filling for these MSMEs. Then we have Abhiroop with us. Velocity is doing some excellent work on cash flow based funding of new age businesses. So the important thing there is traditionally basically all MSME financing is based on tangible assets, receivables, inventory and such things, whereas they are doing work where they look at the cash flows of the D2C brands and other new age businesses and trying to provide financing to that, right? So let's kick off the panel with one common subject on which I'd like to have comments from all of you. So this MSME funding gap, right? So If you do a Google search, I mean, the first thing you come across is about the lack of liquidity, lack of credit, etc. And I was reading a recent EY report that there is still a MSME credit gap of about 25 trillion in India, 25 lakh crores. So despite so many government schemes over the years, I mean, as journalists, we've covered ECLGS, credit guarantee scheme, then we have Swanidhi and Mudra, and despite all this, why does this gap still exist? I mean, can I hear from you, Mr. Gupta?
First of all, let me express my sincere thanks to Business Line for organizing this event on World MSME Day and inviting me. I'm extremely thankful. As you rightly said, that the funding gap in the MSME sector is huge. It is approximately 25 lakh crores, and different reports keep on increasing this particular figure. As we all know that MSMEs, the financial needs of the MSMEs are quite diverse, and the organizational structure of MSMEs in our country is also very unique. About 6.5 to 7 crores MSMEs which are there in the country, almost more than 95% of the units are in micro sector, which is quite informal. They don't have even their GST registration number. Then 2-3% are small enterprises, and the remaining are medium enterprises. There are certain historical reasons that why this much gap in the funding of MSME exists in our country, despite the fact that MSME is the backbone of Indian economy, which has been elaborately explained in the previous session about the contribution of MSMEs and all that. Well, I think that the first and the foremost point which comes in the way of extending finance to MSMEs is the inhibition on part of banks and financial institutions, because these MSMEs, particularly micro enterprises and small businesses, they don't have a credit history. See, all these public financial institutions, banks and financial institutions, they see the previous trend, they see the previous credit history of the borrower, and then they come forward and give the lending. So lack of credit history of these MSMEs, particularly micro enterprises and informal micro enterprises, is coming in the very big way of extending finance to most deserving MSMEs also. The second and the another important reason is the lack of collateral. Basically, you all know that the public sector banks and financial institutions, they are only doing the secured lending, and we are governed by the audit, we are governed by the CVC, CBI guidelines and all that. So there is the first generation entrepreneurs, and mostly those MSMEs, those entrepreneurs which are not able to afford a good collateral, matching collateral, the banks feel very scary and skepticism. So in order to alleviate this problem, SIDBI has taken a very, you all know that CGTMSE was established way back in 2000 when SIDBI took the lead along with Ministry of MSME. So the basic idea was to allay this fear, allay this inhibition from the minds of the bankers and financial institutions, that if the project is viable, if the project is doable, and the project is capable of generating the revenue which will self-liquidate the loan, but the entrepreneur is not able to give the collateral, you come forward, lend, and there is an institution which will guarantee that loan. So I'm very happy to inform that over the years CGTMSE has grown very huge in its stature, and in the FY23 itself, more than 1 lakh crore worth of guarantees were issued, and in FY24 within 6 months this 1 lakh crore worth of guarantees were completed in just 6 months time. So see, a very transformations has also been introduced by CGTMSE in its schemes. You all know that the threshold limit of guarantee has also been increased from 2 crores to 5 crores worth of loan. There is a massive reduction in the guarantee fees, and there are extended guarantee covers for aspirational districts, for enterprises promoted by women entrepreneurs, SC, ST and all that. So this will come a long way in bridging this particular credit gap. And the third and another most important reason, that still banks are looking for the asset-based financing type of model. Whereas the sector is changing very fast, the needs are changing very fast. MSMEs, they need very quick and small ticket size loan of disbursement type of thing. So a new model which is slowly emerging with the help of the fintechs, banks and NBFCs and FIs are also adopting that. It is a cash-based financing model. So as and when this model picks up and we are able to cover more and more enterprises into the cash-based lending, I'm sure that this gap will definitely lessen. But nevertheless, it will take a huge time to cover this entire unmet gap. But if all the stakeholders and, to some extent, I will say that MSMEs also, if they try to depict their actual turnover in the books, if they try to adopt the digital footprints, they will develop a credit history that will give some confidence to the bankers and the lenders also to lend to the doable projects. So this gap is persisting as of now, but gradually it will reduce.
Right. I mean, those points about how much of the bank lending especially is still dependent on collateral, credit history. You're trying to solve that problem, right, in Velocity. I mean, you lend to D2C businesses like Smoor, for example. I know Smoor because I order from them. So
yes, great chocolates.
Yeah, that's right. So these really small businesses where the tangible assets, this traditional inventory, plant and machinery may not exist, right?
Yeah.
So how are you solving that problem?
So see, I'll also just touch upon a few points that Sir made also, that I think MSME gap still remains. Definitely lack of collateral is one reason that people may not have collateral, but they have a good viable business which has cash flows. So the financing model needs to move to a cash flow based model. But beyond that, I think, as was correctly pointed out, that the MSME gap is towards the smaller end of the entire spectrum, right? So, which is more costly to serve for the bank because the potential revenue opportunity at an individual MSME level may not be very high. So the commercial incentives will push the financer towards the bigger customers, larger corporates, etc. And that's why this gap remains. So it has to be a model in which these people are discoverable through online channels. That's the approach that we have taken, is that we approach MSMEs who are essentially connected to any of the e-commerce platforms. If they are selling on Zomato, if they are selling on Amazon, if they are selling on Flipkart, then it becomes easy and cheaper for us to approach them, discover them, understand their cash flows on the back of these platforms, and then offer financing on the back of that model. So it's both discoverability through digital connected media, as well as the fact that you do get a lot of cash flow information that you can access and that you can use to assess the risk of the underlying loan. And that becomes premise of the new approach that we are trying to like work upon. I believe that India is at a point where this is only going to become better and better over time. Because what is happening is that there is this big wave of SME formalization that is anyway happening, driven by digital payments, driven by GST, driven by a higher share of banking transactions that you can see in the bank statements actually. All of these are tangible, decade-long changes which are going to happen. And I am extremely bullish on the fact that on the back of this, a lot of financing will be made available to the MSME sector. And we can already see banks, NBFCs, fintechs, all working hard towards addressing that gap.
Right. So, Ashish, coming to you, I mean, he's dealing with firms that are discoverable digitally, but you are dealing with businesses that have traditionally been completely off the net, right? So, the small mom and pop stores, retail trade, which is actually the backbone of India's services economy itself. So, how have you, I mean, why does a credit gap exist there, and what can be done to actually solve it?
So, hello? Yeah. Before coming here, I was looking at the exact precise definition of, even the micro end of the MSME. The micro end goes all the way up to 5 crores in turnover and about 1 crore rupees in investment. We deal with Kirana stores, so we are an e-commerce platform that connects 175,000 Kirana stores all across the country to 2,000 brands and over 5,000 manufacturers and suppliers looking to sell their products in Kirana stores. Anything that you can buy in a Kirana store is available on our platform. We solve for payment, logistics, warehousing, literally the entire ecosystem to make it easier. We also help Kirana stores transform their stores into omni-channel grocery stores to be able to serve the needs of the modern consumer in urban India. Now, we've been doing, enablement of lending in this ecosystem for about 7.5 out of the 9 years that we've been in existence. We'll approach this year, we'll end up at about 1 crore transactions enabled. Average ticket size is 4,000 rupees.
Oh.
Right? And that's where part of the problem exists, right? This is not multiple issues that you contend with. See, if a Kirana store, 600 SKUs, no collateral, 3 to 5 lakh rupees of investment, 3 to 5 lakh rupees of sales on a monthly basis, 100 to 125 different suppliers. It doesn't get more fragmented than this. Most of them have no GST registration. Udhyam is starting to come up. And therefore, there's a massive challenge in both underwriting, but also a challenge in actually collections and repayment, right? This is not an AUM building exercise that anybody will be attracted to. I almost feel like, MSME does injustice. I mean, we are talking at the nano end of the nano enterprise part of it. And that's part of the reasons where, a lot of, we're not a NBFC, we work with NBFCs. One of the challenges I see is people try and use the same metrics and the same processes for even a SMOR or, somebody who's running a small manufacturing facility to underwrite a Kirana. That doesn't work, right? It just is not going to work. This model is only workable if you have access to data, obviously with the permission of the customer, that gives you insight into, flows. We're in the fortunate situation to actually have a very large share of wallet of some of our customers, 25-30% in a customer that actually deals with over 100 customers gives you access to a little bit more information that allows people to have comfort. But I wouldn't want to trivialize, this to just an underwriting problem. I think one of the bigger challenges is, we're approaching about 3,500 crores of transactions now on credit. 99.7% repayment rate, right? When people look at this segment of customers, they say, oh, very high risk. If you do it well, it actually is probably the best return on investment that you can have, right? But obviously, it requires you to be technology enabled at an NBFC or a lender side, right? You can't do this if you're using paper. It has to be API enabled. You can't have a lot of physical touch points. Our deliveries actually enable us to, do collections, because still collections, despite the progress of UPI, a lot of cash is still coming in, right? And these are problems that this ecosystem needs to solve. And I almost feel like you need to sort of solve for nano very separately compared to, even micro. And that's where part of, I think, the solutions will come from. But it's an exciting time to be building. I think we're seeing a lot of traction, and, it's great to see people, I wouldn't say waking up. I mean, I think everybody's been pretty aware of the fact that this is required. But finally, I think across the digital adoption spectrum, across, government policy, the fact that, we have people like Sidney on this panel, means that I think there's a massive opportunity over the next few years to actually correct that gap.
Yeah, that's a very good point, because even traditionally, I mean, the problem has been that this medium and small actually hog a lot of the bank credit, and the micro really gets squeezed out, and the micro makes up 90-95% of the enterprises, right? So, and recently there has been a change in the government definition also in 2020, where they have substantially lifted the definition turnover to 5 crore for micro, and the medium actually goes to 250 crores, right, sir? So, how has that actually changed the dynamics of lending? Has it made it even tougher for these nano enterprises to actually get formal finance?
This is a very good thing. This is a very good question. See, as a part of Atma Nirbhar package, which was unveiled by Honorable Finance Minister in 2020 when country was grappling with COVID, there was a massive increase in the definition of micro, small and medium. Just for the benefit of the audience and all that, let me just slightly elaborate on that. Previously, there was a distinction between manufacturing and service enterprises also, and there was a definition which was linked to investment in plant and machinery for manufacturing enterprises and investment in equipment for service enterprises. The definition, or we can say the threshold, was very, very less. For micro, the investment in plant and machinery was, for manufacturing enterprises, for micro, it was only 25 lakhs. And for 25 lakhs, and then for small, it was, I think, 5 crores. And for medium, it was 10 crores. And for services, the investment in equipment for micro, 10 lakhs, 2 crores and 5 crores. This was the definition. So this government of India thought that this definition was fixed long time back in 2006 when MSMED Act was enacted and all that, and over a period the inflation went so high, the plant and machineries investments also, and this particular definition was inhibiting the MSMEs to come out of the MSMEs domain, because they were fearing that they will lose all the benefits and the incentives which are being given by the Government of India for benefit of MSME sector. So realizing this and again moving in tandem with the world definition of MSMEs, the Government of India took a very bold step. First, the distinction between manufacturing and service enterprises was done away with, and then two criteria were brought into. One criteria was investment in plant and machinery, and second was the turnover also. So for this micro enterprises, see, from 25 lakhs, investment was made to 1 crore, and the turnover was 5 crores. For small, it is 10 crore up to 50 crores. And then for medium enterprises, 50 crores investment in plant and machinery and up to 250 crores worth of turnover. Another important thing which is very, very important, which Government of India did, while computing the quantum of turnover, they have removed the component of exports, which is done by the MSMEs. The basic idea is to enable these MSMEs to export more and more and, make India a very export-oriented, export-dominated country. So since there is a massive increase, massive upward in the definition of both all micro, small and medium enterprises, it has been accepted very well by the industry also and by the bankers also. There has been a great increase in the credit offtake across all the segments. As far as SIDBI is concerned, I can say that, ma'am, in last 4 years, our lending to MSMEs through refinance as well as through direct finance has multiplied 4 times. Our loans and advances portfolio, which was lower than 1 lakh crore, sometimes in FY20, we ended our balance sheet of assets, loans and advances of 4,50,000 crore. So this is, if one organization has done this, across the country you can see that there has been massive growth in the credit for this MSME sector. So this enhancement in definition has enabled the MSMEs to now come forward, ask for the loans and advances from the banks and financial institutions without fearing that they will lose the benefits and incentives of the MSME, because now sky is going to be the limit. This up to medium enterprises also 50 crores of turnover, 50 crores of investment in plant and machinery, and that is not the gross block. That is again the depreciated value of plant and machinery filed as per the last ITR, and turnover up to 250 crores excluding the export. So now the canvas has become very, very big. There is a lot of opportunity for every player to fill this gap of 25 lakh crores which was existing. So I have seen from SIDBI's point of view and from the industry point of view, there has been good increase in the credit, and I see further traction also in the times to come.
Yeah, so Ashish, would you agree that this has helped the kind of enterprises that you deal with?
See, I think there's definitely more interest, right? But I will also be honest about, part of the problem sometimes lies in the metrics that we use, right? If you look at it, all of us talk in, lakhs of crores, thousands of crores, etc. When you do that, you automatically push attention towards larger tickets, right? And that's one of the reasons why I believe, right? We work with a lot of NBFCs. We've talked to a lot of people. Anybody who comes in the door saying, my goal over the next year is to build an AUM of X crores, I know in the first 5 minutes that's going to be a problem in that conversation, right? Some of these conversations need to start with how many enterprises or how many businesses are you building into the formal net, right? Credit is a need that evolves over time. People's ability to absorb credit also evolves over time, but you have to have a starting point. And in my opinion, in the nano enterprise, in the Kirana segment, right? The first input is building, credit behavior, right? Building behavior around the fact that there's a certain amount of discipline. There's a certain amount of, ability to manage cash flow. We spend a lot of our time with our customers actually educating them on how to manage cash flows, right? Because, just to give you a sense, if we define bounce as, we have a 21-day credit product. And if you don't pay on the 21st day, you call it a theoretical bounce. Any guesses on what that bounce percentage is, right? Which is on the day that you're supposed to pay back, what percentage of people don't pay back? Just wild guess.
25%?
So you're actually very close. It's about, 18 to 21% don't pay on that day. But they pay very quickly after that, right? And that is, indicative of the fact that people don't have the, obviously, simple things like this, right? It rains today. I anticipated more customers would come in. they did not come in, or India-England match, I'm very conscious of the fact that people will start losing interest in 5 minutes. I anticipated a number of customers would walk in the evening today. India's playing England, exciting match, fewer people come in, quite likely I'm going to default on some payment tomorrow, right? And therefore that behavior takes time to build. That takes, a very different view of how to look at credit. And one important element is the metrics that we use, right? This is not going to result in tens of thousands of crores of, capital overnight. By the way, I'm of the view that, the way to, this is not about, we should also not turn these conversations into how much credit to deploy, right? Financial needs can be solved by various other mechanisms. For example, faster inventory turns reduce and obviate the need for credit itself, right? We see this with suppliers that are, micro enterprises that are selling to these retailers. The fact that you can actually do this and not have to hold, huge amounts of inventory in your pipeline because you have much better visibility into what is demand and you can manufacture according to that, fundamentally reduces the need of credit. You will not end up with, AUM there, but you will actually have solved a fundamental problem in this ecosystem. That's how I would look at it.
So when we traditionally think of MSMEs and when we used to hold these conclaves many years ago, it used to be typically about exporters from Tirupur or engineering manufacturers from Coimbatore and so on. But the Indian economy has transformed so much, and today if you see where consumers are actually spending the bulk of their incomes, recently there was a household expenditure survey also. Increasingly people are spending on services and experiences and less on goods and essentials, right? So are MSMEs also changing accordingly, or do they remain sort of wedded to the old exports and that kind of a business? What have you observed?
So I would say that certainly MSMEs are changing with the demand and with the trends. We are very close to the fact that a lot of demand is moving online, for example. A lot of retail transactions are moving to e-commerce, and that is going to be further powered by ONDC growing over time, right? And we see that in line with that, the number of MSMEs who are selling online, that is growing at a rate of 35 to 40% year on year. We track that very closely because that is our bread and butter. But that is a very phenomenal growth. You also mentioned that if you look at the sectoral split, then people are essentially moving from the need part of Maslow's hierarchy to the desire part of Maslow's hierarchy, right? That people are keen to spend on experiences, people are keen to spend on fashion and lifestyle, etc. And these are big categories where MSMEs are also building their business. So I feel that MSMEs are definitely watching where the demand is going, and they are eager to essentially be in those channels, be in those areas where the consumer interest is going to move. And I would say that another very interesting trend that we see, as you talked about exporters and traditional manufacturers, etc., is that as the next generation is essentially coming into business, they are keen to do something new age. So already, for example, we work with a lot of brands in which the previous generation's business was an exporter business, manufacturing business, but the next generation has come in and they are keen to leverage some of the assets, but to build a digital first brand out of it, right? That's a very clear trend that we are seeing in the market.
So Sanjay, if MSMEs are also changing in character, how much do these traditional lending models which involve hypothecation of inventory and then bills discounting, banks tend to look at it that way, right? So for these new age businesses, they may not have much inventory. The business may be on a cash basis, not so much of receivables. Or they may be very fragmented receivables which can't be discounted, etc. So are you seeing the change happening in the lenders also to cater to this kind of business?
Yeah, definitely I see a lot of change. As I mentioned in the beginning also that now the requirement of micro enterprises and the MSME sector is basically cash flow based type of funding where they require small ticket size loans very, very quickly, and the turnaround time should be very, very less. So various new age fintechs have come, and SIDBI has also promoted online PSB loans in 59 minutes. That is one example of that. Realizing this thing as a lender, as a responsible lender for the MSME, we have also taken very proactive steps in developing these type of products. I will tell that by using completely automated product, we have introduced in the market for the first time. I think SIDBI is the first lender to introduce a completely digitized product of up to 3 crores worth of loan, which we call it as Express. It is a completely paperless, it's a machine algorithm based lending thing in which the borrower and the lender They don't even see face to face each other. They have to only simply key in certain data into the package, into the website, and how it develops. See, every lender is now developing its own model. The fintechs are also developing their own model, that how to assess the credit worthiness of these NBFCs, not on the basis of the previous credit track record, which they may not be having, but for the future cash flows and all that. So I'm very happy to inform that SIDBI, that CIBIL and PSB online in 59 minutes under the mentorship of SIDBI, we have developed a very powerful tool, madam. This is called FIT, Financial Income Trade. This is a rank. This rank is between 1 to 10, and this 1 is the highest, 10 is the lowest. What this rank does, you know that these days lot of digital, the world is moving towards digital. GST is digital, ITR is digital, bank statements are digital, and account aggregator framework and all that. So this financial income trade rank takes into consideration 3-4 major aspects of a particular MSME, which is, asking for these type of fast loans. They will first off see the GST returns filed by the enterprise over the last few years. What will be the GST returns? How is the GST sales? What are the suppliers? What are the customers? It's a complete report. Then income tax returns filed by the enterprise over the last 2-3 years. And then the bank statement, how much credit is coming out of the sales, how much he is deploying in the business, how much he is taking out of the business. So based on these 3 important parameters, financial, income and trade, the system computes, the algorithm computes a fit rank, which is from 1 to 10. One is this fit rank is nothing but the probability of an MSME going into default in the next 12 months. So if this rank is high, and this is very, very tough rank, if MSMEs are getting 1 to 6 ranks, which is an investable rank as far as SIDBI is also concerned, straight away blindly, you can give loans to them, and you are rest assured that it is going to come. Because this digital revolution is this fintech lending, or this digital changing, whatever has taken place in the ecosystem. This is the lender, before extending the finance to the MSME, he has himself ensured very much to such an extent that the credit behavior, the repayment behavior, the geographical spread of the enterprise, everything else is taken care of by this, because the machine, do not tell a lie. So this particular rank gives a lot of comfort to the lender, and it is going to increase, and SIDBI is also doing much more business in this express type of funding, and we are the first one to introduce up to 3 crores worth. So I see that this new age fintech type of funding, wherein they are going to use these digital tools, and without the knowledge of today, MSMEs must realize that by using the digital footprints, by selling, showing their returns in the GST, filing their income tax return, paying their credit card dues in time, they are not only, without their knowledge, the lender knows much about them. If the credit history of the particular micro enterprise or small enterprise is good, the lenders will keep running to their doorstep to offer the loans. If the credit score, if the CMR is good, if the Jokata rating is good, if your CIBIL score is more than 8 or 850, people will keep coming and running to you. The onus here, I would like to utilize this platform to tell MSMEs also that time has come, friends. Now you also need to inculcate some sort of digital discipline in you. Do business in number 1. Show your returns. File your returns in time. You never know that a small lapse on your part, even once, is enough to spoil your credit record, your credit history, and whatever credentials you have built over a long period of time, it will be spoiled. So onus is on my MSME brothers and sisters also to flow with the world, to go digital and do everything transparently, fairly, comply with the rules, and then you will see there is no dearth of lenders who will not ever come to you and offer the loans. But the point is how compliant, how meticulous we are in following the rules and regulations.
Yeah, so suppose some of these MSMEs are below the GST threshold limit and actually income tax threshold limits. So in those cases, you say that you do facilitate finance, right? So who are these financiers, and at what kind of rates do they actually lend, and what do they use as raw material to assess credit?
So, today, out of the 1,75,000 retailers that we power using the Jumbo Tail platform, I think about 80% of them have some form of credit line or the other orchestrated through the platform. Starting as low as 2,000 rupees and then, building up over a period of time. We work with, a number of new age, fintechs and NBFCs who are in turn working with larger lenders on the other side. I just wanted to maybe address a point that Sir was making earlier, right? Which is, I think it's absolutely critical that, people file taxes, I think about 3% of our retailers have GST, right? And if you really look at, so there are definitely going to need to be other mechanisms of underwriting. And also, I think one is about, mechanisms like GST, obviously very, very critical, but we'll have to have other mechanisms, which is where, transactions on platforms like ours or anchors, embedded finance is actually a quite helpful way of doing it, because not only is that transaction validated, it is validated by somebody who has an interest in making sure that that prepayment actually happens. But also, I think the need for, these are still points in time, right? This is, you file your returns once a quarter, sometimes once, a year for other things. I think the world has come, and Mr. Ganesh was talking about this, the previous panel alluded to this as well. We're in a much faster changing world, right? I mean, just simple things like, if I'm a Kirana store and somebody, a government body digs up the road in front of my shop for the next 3 months, my cash flows are going to suffer. Irrespective of what, even if I was a large enough entity to have filed GST, it's quite likely I am going to suffer stress. So I think the pace of underwriting, this has to be constantly underwritten, right? The data streams have to be real time or near real time. And you have to constantly keep understanding and evaluating based on a large number of parameters, which is what, platforms like us are trying to do. Not just, in terms of what you're buying, the type of products that you're buying, because many times we've realized things that are sold by retailers to restaurants, which by the way have a massive mortality rate, right? The chances of a restaurant going belly up are much higher than a retailer going belly up. But if you're buying products that are actually getting sold into a retailer, into a restaurant, the risk that we perceive to you is actually much higher than if you're selling to consumers, which is a lot more steady business, right? If you're actually selling things in an area where there are a lot of PGs, where people go away sometimes during periods. We saw this during COVID a lot. Your risk of default is much higher if you're in a residential area where people are not going to go away, right? And so I think the need for us to look beyond, not only just to absolutely to use the data that the government and the digital public infrastructure is a tremendous asset to all of us trying to solve this problem. But I think there's a lot of data that is embedded in the transaction and in the provision of services and goods to these enterprises, which if with their permission, if you're able to use and help underwrite, then you reward good behavior. You reward not only good financial behavior, you also reward behavior which is taking an appropriate amount of risk, but not too much risk, not over leveraging, not having concentration on customers that will actually be extremely dangerous. In terms of rates, right? They will be typical rates. They'll end up being in the, these loans are closer to, I guess, personal loans in terms of rates. We try our best to bring those down.
Absolutely.
And that's where one of the best, you'll end up in the, late teens, early 20s, is what you'll end up in. Our goal is to bring this down. On this panel, I would say if Sidvi went on the panel, we could bring it down much, much lower. And, this is one of the things that we'd love to be able to do. Because if you really look at it from a risk basis, it's a much lower risk than we perceive. And that's where I believe that, there's an opportunity, there's pricing arbitrage available to bring it down dramatically. And also, if you were to follow traditional norms to underwrite, not more than 25% of these people would actually get access. We're able to, increase that substantially by virtue of the data, and also the, in the early days when we started out 6-7 years ago, we were providing guarantees, right? And once you have credit history, lenders are a lot more comfortable. But I would say on this platform, I'm putting you on the spot, sir, but I'd love for you to lend on our platform, right? Because it can bring the cost down tremendously.
Right. So Abhirup, you actually do this lending, right, to these businesses. So what is it that you look for while lending to these businesses that are far below the GST threshold, may not have formal books of account, no inventory also? So what do you really look at when assessing them for credit?
Sure.
And what has been your experience? Do Are the default rates in the single digits? What is it like?
So to just clarify, we don't lend on our own books right now. We have applied for the NBFC license, but right now we work with banks and NBFCs in which we originate the demand for them. But we also provide a bunch of data points to them which can support their underwriting process. And what we have seen there is that particularly when you're talking about the lower end of the spectrum, right, where people are not even filing GST because they are not of that scale yet, there also they have some transaction data that would be there on the platform. So the platforms that we work with, which includes e-commerce platforms, which includes your food delivery apps, etc., you would see a lot of entities there which are doing some volume there. And because of our partnerships, we are able to get that data directly from the source. So it's not touched by the borrower at all, but we are directly able to pull it from the source itself. And that data becomes an important input for the partner financier that we have to be able to assess the cash flow, to be able to assess the patterns in terms of seasonality, in terms of the potential any issues that they are supposed to face, etc. And they can build their underwriting models based upon that. So we believe that as a lot of transactions are moving online, it could be transactions on e-commerce platforms, but more broadly, I think it would also be digital payments driven by UPI, right? I mean, all the retailers today are accepting UPI, and that is actual cash flow data that is available for the financiers to understand the cash flow, the daily actual remittances which are happening in the bank account, which is extremely valuable from the point of view of you being able to assess the eligibility of the customer and extend a credit line to the customer based upon their scale.
So recently, one problem that most MSMEs complain of is this problem of receivables, where their clients don't pay them in time and keep stretching the timeline. And I know of many policy interventions to try and crunch this, from declaration in annual report and all that stuff. And recently, the government tried to enforce it by saying that you have to pay your MSME vendors within 45 days. And surprisingly, as a journalist, we reported on this, and most of the pushback came from the MSME associations themselves, saying, we don't want this 45-day limit. What is this? What's happening here?
Actually, it's a catch-22 type of situation, this rule of 45 days. One of the perennial problem with the MSMEs is the lack of working capital finance, lack of working capital. And since most of the MSMEs are vendor of the big corporates, and they are supplying parts, sub-assemblies, accessories, components, and the credit period goes up to 4 to 5 months also. So the point is, this rule was made last year by the Honorable Finance Minister, Section 43BH, that for the MSME payment you will get the deduction of expenses only in that year in which you will pay. Otherwise, 45 days limit is there. So to elevate, there may be some reservations from the MSMEs, because probably the corporates are bullying them that, we will not do now further business with you because now this rule has come, and you were working with us so fine for the last so many years with 3-4 months of credit period. So it's a mix of, some change of mindset also is required to be to take place at the levels of the corporates also, because they know that unless they repay in time or within 45 days to these MSMEs, how they will be able to deploy that money back into the business. And if there are reservations and protests from MSME associations itself, I don't know what will be the real reason, because this drastic measure Government of India has taken only to benefit them, because since centuries there has been a hue and cry that the working capital problem is the basic problem. Sir, we don't get the payment of our supplies made to these big corporates or even to government in time. I'll just tell you, in order to elevate this problem, you must have heard about TREDS, Trade Receivable Discounting System. SIDBI again took lead. See, let me tell you, friends, I don't know how much you know about SIDBI. Besides financing, we are working for the development of the ecosystem of the MSMEs as such, starting from establishment of CGTMSE to Stand Up India, Startup, Mudra, PM Swanidhi, PM Vishwakarma, all these things, Udyami Mitra portal, all these things are being managed by us. So एक picture के director की तरह पर्दे के पीछे रह के we are doing so many things, but in the forefront it is not becoming visible to the public. So entire MSME ecosystem is being taken care by SIDBI, and with the help of, in association with NSE, I think SIDBI was the first one to establish first receivable exchange of India, RIXL. So this TREDS is a very good platform, and government has mandated that all all those corporates which have a turnover of more than 500 crores, they have to be mandatorily, listed on this TEDS platform. But the other day I was just reading a report, more than 5,000 companies have been identified by Ministry of Corporate Affairs which have turnover of more than 500 crores, which are mandatorily to be listed on this TEDS platform. But you will be surprised to note, not even 2,000 companies have been listed. So, what I feel that if we have to elevate, if we have to counter this problem of delayed payment to the MSMEs, much more stricter rules have to be made for all those corporates which are having a turnover of 500 crores or more. Now there is a demand that you reduce this threshold to 250 crores. Maybe in this coming budget, Honorable Finance Minister may announce that also. Because the perennial problem of MSMEs is the working capital. If they don't get the repayment, if they don't get the payment of their supplies in time, they are doomed. They are just finished. So this is, if associations are making a hue and cry, I don't know, but this has been done by the government with a very good intention.
In fact, after we reported on this, we got a pushback from the finance ministry saying, we did this for the good of MSMEs only, now why are they come?
Why are they?
Abhirup, you have
Yeah, I can probably share a few perspectives on this because I have a bit of a different point of view on this, sir. I believe that different supply chains have different inherent credit periods. And a 45-day blanket period may not really apply to all the supply chains. That is one point to consider because if you're selling to a buyer and the buyer has not been able to sell the goods to their customers and you force the buyer to pay within 45 days, then they're going to come back to you and say that, okay, take your goods back, order cancelled, right? So it needs to be a bit more nuanced in my opinion that understanding that supply chain, understanding how fast that good moves, you can take a call in terms of what is the right credit period for that. Secondly, I think, I also believe that the first problem to solve is just visibility because MSMEs should know that who is a good payer, who is not a good payer, right? As of now in the country, we have a CIBIL score. MSMEs give credit to their buyers. But there is no way for them to assess that is this a good paymaster or not, right? If information is provided like that, then they can take that call at the point of entering into that contract itself and they can try and price that in. That's the second point that I had here. And third, I believe is that, in B2B supply chains, this credit gap is going to remain, right? Because of the inherent nature that goods will take time to move, inventory needs to be held, and all of these credit periods keep on adding up, right? And I think that's where the role of the financiers come in. That you have financiers who would understand the supply chain, who would understand the overall working capital cycle, and then who can infuse capital which will essentially plug in the credit gap. So it's a combination of these couple of initiatives, in my opinion, which can address a gap. The problem is obviously there. MSMEs are facing like working capital gaps, and a big part of the reason is that they are not getting paid on time. But in my opinion, it requires a more nuanced and comprehensive solution.
Yeah, those are very interesting. Ashish.
Just a 10-second thing, right? I think the intent is very clear and very honorable. Every supply chain has its own requirements, but I think it's also about, one size fits all often ignores the fact that, if you sort of look at the spirit and the intent behind what was intended, in my opinion, right? It is anything that is not voluntary and anything that is not predictable, right? Those are the things that you're trying to avoid, right? That I, entered this trade with an assumption that this money will come back in this much time. Now, without my permission, it's not coming back, or I expected it to come back in X days and it's not coming in X days. Those are the problems that actually need to be solved. The challenge with a 45-day blanket is it doesn't take into consideration that, different requirements are different, and that's where, it's a starting point. I'm sure, next version of this will sort of take that into consideration. But those are the two problems that you actually need to solve.
Absolutely. Because I do remember RBI reports, saying that actually the delinquency rates in large corporate borrowers in India are far higher than the MSME actually. Even during the crisis time, global financial crisis, I remember reading these statistics. And much of these big defaults, people flying off to London, etc., you hear about are actually large corporates. So, yeah. So a final question, which is a teaser, why is it that MSMEs actually which are profitable and have cash flows, face such a tough time actually raising funding, whether through equity or debt route, while anybody who labels themselves as a startup and has tech in their name, they're able to raise billions in multiple series and then write it off also very quickly. So Ashish, would you like to take?
You are asking that why the startups are able to raise the funding quickly and why MSMEs are failing. It's a very, good question. The startups and MSMEs, you need to know the basic difference between the two structures. Startups are tech-based companies, ideas, which provide very faster, innovative solutions to an existing problem. And these are very high risk, high return type of thing. That is the definition of startup. We all know that. Investors see a lot of value in this, idea, in this particular startup. They know that if they invest, there is a probability of, going the money down the drain, or there is a probability of multiplying the money 10 times, 20 times, 100 times also. Who would have thought that Uber, without owning a single car in its fleet, will be the world's biggest car aggregator? Big Basket, our Mr. Ganesh is the director. People would not have thought sometime before that there would be platforms coming like this who would be delivering the household grocery at their doorstep. I myself started using this Big Basket for the first time during the COVID times when I was not able to go to the market to fetch the grocery for me. So startups are basically, ma'am, they are very lucrative. Today is the word of technology, and they provide, with the help of technology, they are able to provide solutions which will cater to the masses as such. Investors see a lot of value, and investors also see that there is a definite exit time frame also within that particular startup. If the startup company, if the startup idea works very well, and they will have the opportunity to take their money back, because the offloading will take place. Unlike MSME, here the, again, conventional type of manufacturing or service enterprises, there is no exit there is no exit option. So no doubt there are certain private equity players which are investing in the MSMEs also, but traditionally this is a sector which is not doing anything very innovative. They are basically in the, again, manufacturing of goods, supplying of the services also. Exit option is not there. If you have lent to an MSME, you will have to go by the loan repayment schedule, which is generally of typical 5 to 7 years. And there is no multiplication of your investment in that. Whatever you have lent, you are going to recover that only. So this, in my opinion, are certain 2-3 factors which make MSMEs less lucrative to the private equities as compared to the startups.
Slightly different take on this. I think when it comes to equity, you're right, it's a lot easier for companies like ours to raise that capital. On debt, it actually isn't. That story is very different. Even today, 9 years in, getting debt is a very different story. But I think in terms of why, MSMEs, I just want to I was just thinking about this, just struck me right now, right? We are here on World MSME Day. One of the reasons is also the media, right? I mean, if you think about, who is in the public imagination, who is getting, there's a reinforcement cycle, right? I mean, vast majority of the jobs in this country are provided by MSMEs. Yet, even on MSME Day, right, there's not a single MSME actually on this panel. And therefore, if you look at the, the public consciousness and, the people with the money, I mean, they're not really getting access to some of these stories. I can tell you, there's some very innovative people. There are some, vast majority of MSMEs, especially as you go further and further down, are doing these businesses to feed their families, to send their children to school for a better future. They have every incentive to make it work, and which is what makes them incredibly creditworthy, right? They definitely have challenges in terms of, just visibility. I mean, today is a great example of that, right? And I'll just end on, Lal Bahadur Shastri said, Jai Jawan, Jai Kisan, right? And when we were starting our company, we said, the customer who is a nano entrepreneur must also play an important role. So our motto is Jai Jawan, Jai Kisan, and on World MSME Day, Jai Dukan as well, and Jai Hind, obviously. But I think it's very important for us to, and I would request, right, as part of a day like this, representation, putting those stories in front of people is extremely important, because there's a lot of dogma, there's a lot of misplaced belief around the risk that you're entering into. It's not that high.
Yeah, point well taken, definitely.
So I would just allude to the point that sir made earlier, that I think different types of funders have different risk appetite. and they play in different zones from a risk return point of view. So you would have equity investors who are playing the high risk, high return game. And I was a VC before this, so that was the play that you would essentially look at companies which can deliver outsized growth on the back of some innovative technology and who can potentially become a unicorn, right? Everyone talks about unicorn these days. Because the bet that a VC investor is placing is that I will make 10 investments. Even if one of them work out and becomes a very large company, that will make up for the other 9 to fail. On the other hand, when you're talking about more predictable businesses, businesses which are cash flow positive, businesses which are actually growing at a steady pace, I would believe that banks and traditional lenders are a better way for them to fund that gap because they are a profitable business. They can deliver a predictable kind of a rate of interest to the financer also. So it's a function of how fast you're looking to grow and what is the kind of return that you can deliver to the funder. But based upon that, I think VCs typically tend to gravitate towards those companies which can deliver higher returns, even if it is higher risk.
We've been out of time for some time now, and I won't keep people from their dinner for too long. So, can I have just 2 or 3 questions, please? I mean, yeah, there's.
My name is Professor Dr. Pranama Raman, and so I work a lot in sustainable organizations as well. Now, irrespective of whether you call it a startup, MSME, these are just terminologies. At the core of it really is an idea and the manifestation, the processes that is built, and this kind of, why really is the policy for this not coming together? Is it a lack of just imagination, or because there is a certain challenge in scaling or in integration with the larger system, right? When we look at collaborations, even abroad, etc., there are chaebol concepts in Japan, Korea, even China. There are the Hauku system, the chaebol, the Keiretsus. They are all conglomerates. Why can't similar MSMEs be grouped, have clusters? We used to have that in the ancient, my research shows that. And there's also clustering in Tamil Nadu. For example, there are certain spaces which are good for certain industries. So what is really the overall policy, and why is it not being done at the grassroots? Where is the research really on all this, and why is it not coming together?
I won't really have an informed point of view on that. That's not. So the question was not very clear. Can you articulate that again? Sorry.
I think she's asking why MSMEs are not better organized.
It was about organization of MSMEs. Sorry.
We don't have any way to say what is the, because we've aggregated this recently in the last decade. Say but where are the real global collaborations? Where are the international associations for this? Why don't we have more knowledge about who is representing what at which regional or international forum, etc.? Why don't they get that opportunity, I'm saying? Because there is a certain value to getting global collaborations. Why should always it be the big and large enterprises? And why not just have this aggregation of representation for the MSMEs as a policy?
I think this will have to be spearheaded by the government, because I think even the Indian MSME associations are pretty splintered, sir. We keep dealing with multiple associations, and they often don't represent the same views also, actually, from what I've seen. So I think this is a point to be taken, and perhaps this is something for the government to actually organize or represent through the ministry or something like that, actually. Any other questions? Yeah, there's a gentleman there in the end.
Hi, good evening. My name is Srinivas. I'm from ECPAC. This is an answer actually to what Mr. Arthi has been asking. Like how Mr. Ashish quoted, there is no MSME in the panel to answer your question as to why the MSME did not like the 45-day rule. It's number one is that corporates are eating into the business of MSME. So if you bring this 45-day rule, so they are less preferred. This is one point. And in my personal experience, I had once quoted this MSME rule and written to the CEO of a big corporate to recover my payment, which was overdue for 1.5 years. They gave me my payment immediately, thanks to the rule, but they stopped my business also. So So this is the answer to your question, ma'am.
Yes, thanks.
So if you can cover it somewhere in your
Right.
an article, that would be helpful. Thank you.
Thank you. Thank you. I seem to be getting more inputs than the panelists. There was somebody there, please. Please give the mic to that person.
Yeah, alluding to what this gentleman said, it's simple. I will put it this way. Just giving an example of Hyderabad. We are sitting in Bangalore and talking about Hyderabad. The Hyderabad, there is the pharmaceutical industry. I don't want to name any. Then it is pharmaceutical industry. People who supply, I'm talking about MSMEs who supply to the pharmaceutical industry in Hyderabad, they fear that they will not get their payment at all. And as he said, they will lose the business. Now, it is like, for example, you're squeezing somebody, you're trying to do business on somebody else's money. This is the general tendency. In the US, for example, when I was there, a friend of mine said, why the hell you have to go to somebody to ask for payment? When you raise an invoice, you get your payment. You don't have to go. Why do you have to go to Hyderabad to get your payment? At one point of time, this is the situation. This has been in the culture of things. You see, you try to, you squeeze. For example, large corporate. As she said, people move away to London and things like that, and to dupe the banks. Sir, you are from Sydney. So people who, there are major flaws like this. I don't want to name any particular company or any group, but basically I'm just giving you the reality. The reality is this. Basically, you don't really, they try to work on your working capital. Basically, they work on your money.
Understand. Yeah. There's one time for a last question from the end there. Yeah.
Again, the same point, because I think all of you all seem to be struggling with trying to explain why it didn't work, Nirmala Sitharaman's. So, I think you have to recognize that 90% of MSMEs is B2B, right? So, within that context, I think it's the big B that does most of, it's right up there at the value chain. But at the horizontal, there is a lot of, B2B between MSMEs, in their supply chains. You don't really want that to get affected in your balance sheet, which reflects on your access to credit. And that's, if you look a little deeper into this aspect, you will understand why it didn't work.
Thank you, sir. Thank you. So with that, we'll close this extremely lively panel. Thank you for very frank views and very insightful conversation.
Thank you so much for that very insightful panel discussion. I'm sure they deserve a bigger round of applause. Thank you so much. I'll request our moderator, Ms. Aarti Krishnan, to please hand over mementos. And I'll also invite Anil Malik, Zonal Head, West, the Hindu Group, and N. Vaidyanathan, National Head, Product Sale, Business Line, the Hindu Group, to please join us on stage and join our moderator in handing over mementos to our panelists, please. Once again, thanking all our panelists for those valuable insights. I'm I'm sure you found that useful and interesting. Thank you so much, everyone.